Let's get some breaking news now. The local market has plunged at the open following that lead from Wall Street overnight. Joining us live from the ASX in Sydney is our business reporter, Edward Boyd. Ed, the market just opened. It's pretty bad, down more than 5%. Is that right?
That's right, Laura. ASX 200 and the All Ordinaries both down just a little bit over 5% this morning, so the losses are a bit larger than what the futures market was expecting. This morning we were expecting the market to fall 4.3%, and then the futures came back a little bit. We're expecting it to only be down about 1.6%, but just looking at the boards now, it's down 5% in early trade, and technology stocks have been hit particularly hard. They're the worst sector on the market today. We've got a few of the worst performers we can put up on the screen for you. The bottom performer today out of the ASX 200 is the machine learning company Appen. Their shares have been smashed this morning, along with a lot of other tech stocks. The fund manager Magellan has also lost a substantial amount of value today. And a lot of mining companies are lower as well. And BHP is the biggest company on the ASX 200, and it's down about around 6%. So when BHP falls significantly, it actually brings down the entire market with us. The banks are also weaker today. Most of the major banks are down roughly 5% as well, and we know how large an impact they have on our stock market too. So the market is down. It's a sea of red. You can see red all on the boards behind me, and it's going to be red all day. Potentially, there's a chance over the next couple of hours that the market bounces up a little bit and doesn't finish the day down 5%. There's a chance it could finish down about 3% if things do a bit of a U-turn. But at the moment, it's pretty bleak right now. It's down 5% and looking like a tough day for investors.
So, as predicted, investors are concerned about the US Federal Reserve and the need to lift interest rates faster than first thought. Is that right?
That's exactly right. So the expectation was the US Federal Reserve was going to lift interest rates by 50 basis points, or 0.5% this week, and they'll announce their decision early Thursday morning our time. But now there's a group of investors are now expecting the US Federal Reserve is going to have to lift them even more by 0.75%, so 0.75%. And that's really spooked investors in America overnight. That caused a huge sell-off on Wall Street markets overnight, and we saw their share indices fall around the 4.5% to 5% level as well. US markets are in bear territory, which is where the market falls more than 20%. So we've seen the Nasdaq, which is tech stocks, they're in bear territory, and the S&P 500, which is really the top 500 companies across America's stock market, are in bear territory as well. So the fear is a recession being triggered by rising interest rates. So the US Federal Reserve putting up rates, they're only at 0.75% at the moment. So interest rates in the US are actually lower right now than Australia, but they'll be almost doubled potentially by the end of this week. So investors are concerned, and they're going to have concerns throughout this week before the chairman of the Federal Reserve, Jerome Powell, makes his decision early Thursday morning.
Ed, the RBA board will obviously be looking at what happens with the Federal Reserve very closely. This interest rate hike that we just saw, there was a view that perhaps the RBA goes hard and fast. They'll do it this month. They might do it next month as well. Does that give any comfort to mortgage holders in Australia that it could be go hard and fast, and then the pain might not be so bad later on?
It's looking like, Laura, that the RBA will have to go a bit harder at its next board meeting and the one after that, because we've seen the story in America where the US Federal Reserve's lifted interest rates quite aggressively by 0.5%, and it hasn't actually brought down inflation. Inflation has actually gone higher in the US since that previous interest rate hike. So now the US Federal Reserve's got to get a lot more aggressive to bring down inflation from those 40-year highs. Our Reserve Bank will be watching this very closely. And we've got inflation problems in Australia as well, so they could potentially lift rates a lot more aggressively over the next couple of meetings, and we could now be seeing the cash rate around the 2.5% to 3% level potentially by the end of this year. So only 6 months away, we could have a cash rate in Australia at 3%. Remember, it's at 0.85 at the moment, so that's going to be a lot more money Australians will need to spend on their mortgages very quickly, Laura.
Ed, thanks so much for that. They are still historically low, but you're right, they have to find the money from somewhere. Ed, thanks so much.